Got a few urgent, pressing situations that we have to deal with quite urgently. I think the first situation that we have to deal with is... Oh, hold on a second. James, it won't let me share screen. So if you could share the screen. So the first situation that we have to deal with is we have to deal with the looming US government shutdown, because now the odds of a government shutdown are 90%. And if we do get a government shutdown, Goldman Sachs actually says that this shutdown could last as long as 2 to 3 weeks. So I think we actually, for now, need to start preparing for this US government shutdown. The next thing that we have to start preparing for is a massive seller in the market. So this is not a joke. We do have a seller in the market. This seller owns 10% of all the Bitcoin in circulation. They own 1.8 million Bitcoin, and they are going to start selling. In fact, what you can see from this chart over here is that they have already started selling a whole lot of their Bitcoin. So we're going to be talking about this seller, when they're going to hit the market and why that's going to impact the Bitcoin price and how much that's going to impact the Bitcoin price. Then what we need to talk about is we need to talk about this little price move that we had yesterday in Bitcoin and what it actually means, because we seem to be in a position where every time that we get a pump, we get the pump, but then the pump dies. And that's exactly what happened yesterday. So we've got to understand what actually happened yesterday. What took us to 26,800 and brought us back down? And is this thing going to continue to bring us down every single time we have a pump? Then I want to go through a knock by knock account of how Gary Gensler was taken down in Congress yesterday.
Regarding your interactions with FTX and Sam Bankman-Fried. That's the investigation we started last Congress. Finally, your lack of responsiveness to this committee's legitimate oversight continues to be unacceptable. And I want to finish here. In February, the committee made multiple requests for documents to the Securities Exchange Commission. This is normal congressional oversight. Yet 7 months later, the committee has not received a single non-public document that was not part of a FOIA production. As I said, our patience is wearing thin. The SEC is not above the law, nor is it unique. Other financial regulators have routinely complied with congressional oversight. So let me be clear. I do not want to be the first chairman of this committee to issue a subpoena to the Securities Exchange Commission. And you should not want to be the first SEC chair to receive a congressional subpoena. Either we find a path forward where the SEC recognizes Congress as a co-equal branch of government and is responsive to our oversight duties, or my option is to issue a subpoena.
All right, so we're going to go for a blow-by-blow account of exactly what happened yesterday. Gary Gensler was absolutely destroyed in Congress, and then I've got a massive story for you, but I'm going to keep that story until the very end of the show. So let's go, guys. Big show. Alrighty, we are back and we got a massive show for you guys today. And I think the best part of the show today is going to be the part where we discuss how Gary Gensler was annihilated yesterday in Congress. Because this guy yesterday was absolutely annihilated. That's actually not Gary Gensler, believe it or not. So this is actually a true story. Gary Gensler has an identical twin brother. His name is Robert Gensler. I thought that this was an absolute joke, but I actually looked it up and it's true. Gary Gensler does have an identical twin brother. His name is Robert Gensler. No jokes. Anyway, Gary was the one that was destroyed yesterday in Congress. It wasn't Robert. It was actually Gary. But crazy that we actually see these things. All right, listen. Welcome back, guys. Huge show today. I want to just thank you all. I see we're very close to 650,000 subscribers. We are 10 subscribers away from 650,000 subscribers. When we get to 650,000 subscribers, our next move is to catch up to George from 𝗕𝗬𝗓, because he's like our next target. We've got him in our sights. He was 100,000 subscribers ahead of us before the beginning of the year. What is he now? 17,000? 17,000. And the Banter fam are definitely going. We're gonna go after him now. He's our next target. We're gonna try and catch up to him. All right, let's go. We've got a big show today. If you haven't subscribe to the channel, like this content. If we get to, what is the number of likes we had yesterday? 1,500. So if we get to 1,600 likes, I'm going to show you the biggest Bitcoin seller in the market. I'm going to show you why this seller is actually going to be selling. We're going to decide together whether or not we should be panicking about this seller selling. And it's a serious seller. The seller has 1.8 million Bitcoin, which is 10% of the circulating supply on Bitcoin. And they are going to be selling. So yeah, if we get to 1,500 likes and we beat yesterday, then we're going to get into that story. In the interim though, let's look at the bubbles. Let's see what's happening on the bubbles. So I see RUNE is up. Let's just see how RUNE is doing. RUNE up at 187. I actually have got quite a big RUNE position. I see Rollbit at 12 cents. You would be 20% up if you actually took our trade. You got Ape moving. Remember that you got the whole Banter newsroom here on the side. So everything that all the places that where we get our news from are actually available to you right here. And if you want to follow any of our researchers, there's 44 of them. You can just click and you can just follow them directly from the newsroom. We're also improving Banter bubbles. I reckon in about a month, it's going to be the fastest bubble app in the whole market. I'm also watching the 𝗕𝗓𝗓, and I think the reason why we should be watching the 𝗕𝗓𝗓 today is because we had the GDP numbers. The GDP numbers came in at 2.1%. The expected was 2.1%. So no surprise when it comes to GDP. And I think that when we talk about GDP, we need to talk about it in context of the looming government shutdown, because we've got this looming government shutdown. It's a real thing now. You know, we were first saying that the shutdown wouldn't happen, but now Goldman Sachs is saying, look, if the White House don't resolve their differences by the end of tomorrow, that would make it the end of Friday. And by Sunday, they would have a government shutdown. Now, that would be, I think, the fourth government shutdown in the last decade. And it would have a whole lot of effects. I think what we need to do today is actually just look at the effects of a government shutdown. And, you know, do we need to prepare for it? Like, do we need to start stocking up on toilet paper like we did in COVID? Do we need to start stocking up on food, on rice, on oil? We need to make sure that we understand exactly what's happening there. But before we get there, I want to talk about yesterday's little Bitcoin pump. So we had the pump yesterday, and then we had a little bit of a dump. And it keeps happening every single time. We keep losing momentum. Now, I think the pump is probably expected, and I do think we're going to start getting a whole lot more pumps. And I'll tell you why I think we're going to start getting a whole lot more pumps. Because there is more money coming into the Chinese economy. So remember that China's in big trouble now. And the way they're going to get themselves out of trouble is they're going to start stimulating the economy and getting more money into the economy. Well, you can see that liquidity in China is starting to go up because of all these things that China is doing. So I am expecting the price of Bitcoin to start moving upwards because of this liquidity. Ben Cowan has a slightly different take. He said, look, ever since we got the death cross, we actually did wick up. We did have some kind of price recovery, but he says that the wick up was actually a lower high, which he said, which was pretty typical. So he's expecting the death cross to play out like a normal death cross. And if he's right, of course, Bitcoin can go down, I don't know, 30, 40, 50, 60%. We've done a couple of shows talking about just how much the death cross can actually take us down. What I am seeing though is that in crypto, people actually aren't scared. Like the fear and greed index is at 46. That's scary, but not so scary. Like 46, it's nothing. If I compare that to the fear and greed index on the traditional markets, they are now in extreme fear, which is ironic because they are 5 and 6 and 7 and 8% away from all-time high. In fact, let's go quickly look at where the Nasdaq is. US tech stocks, US tech 100. Let's just see where we are on the Nasdaq relative to its all-time highs. So that's the all-time high over there. Let's quickly just go from the all-time high over there and measure all the way down to here. Okay, they're 8% away from all-time high. And crypto is now 50% off its all-time highs. In fact, more than 50% of its all-time highs. Crypto, fear and greed, is at 46. And stock market fear and greed is at 24. Now, I mean, this could be because as crypto people, we're just more conditioned. We don't get scared by little price movements. And, you know, the stock market gets scared by every little price movement because they're not made of the same cloth that we are actually made of. It could also be because these people are starting to panic because of the imminent US government shutdown. And as I was under the impression that the Republicans and the Democrats were going to continue to negotiate and use it as a negotiating tool, but that they wouldn't allow the US government to actually shut down because there are massive, massive, massive implications. The biggest one of the implications is the fact that Moody's has actually threatened to downgrade them if we do actually get the government shutdown. You remember that I showed you this article yesterday where I said, look, the US government shutdown could be bad for the country's credit rating. And Moody's is the only credit agency that hasn't yet downgraded the US. So it could be that. Goldman Sachs is saying that the odds of a shutdown are now at 90%. And if a shutdown does happen, they forecast that it could actually last 2 to 3 weeks. Okay, now that's quite a big time. So I think we need to look at all the different things that they anticipate will happen if we actually do get a government shutdown. They're saying the most likely scenario now is a shutdown. The shutdown will start on 1 October. There's still a chance that Congress could reach a last-minute deal to extend funding past 30 September, but there has been little progress made and there's little time left, so it seems unlikely that it's going to happen. They continue to think that a shutdown would last 2 to 3 weeks. A quick reopening looks unlikely as political positions become more deeply entrenched. Instead, political pressures to reopen the government is likely to gradually build. In particular, pay dates for active duty military, October 13th to November 1st, could be potential pressure points because you do want to be able to pay the military. They have estimated the following. They've estimated that the government shutdown would subtract 0.2 percentage points from Q4 GDP. So it would actually hit the GDP numbers. Now, that's not such a big thing because if you look at the GDP numbers, we just had the GDP numbers. The GDP is coming in at 2.1%. So on an annualized basis, the US is still growing at 8%, which is still 3% above inflation, which means that the US is still firing actually on all cylinders. We can't slow down this US GDP. Some more implications of this potential shutdown. We expect all data releases from all federal agencies to be postponed until the government reopens. That means we get no CPI data, we get no jobs data, we get no data from the government. That's the part that the stock markets are scared of. The stock markets are panicking that they're not going to have data and that they're going to be flying blind, like pilots flying without a map, and not knowing what's happening with the markets. And that's what has been scaring the markets in the last couple of days. And that's also what has been pushing people actually into the _𝗲𝗓. So people are going, look, if the US collapses or if something happens, we want to be in something that's very safe. What's the safest asset to them? Well, safest asset to them, ironically, is still the US dollar and still US government bonds. Crazy, I know. Absolutely crazy. I know. I get it. All right, let's look at some more implications of this US government shutdown. So, first of all, negative effect on GDP. We spoke about that. Next thing, reduced consumer confidence. Possible drop in consumer spending, slowing the economy. Great. We want that. We want the economy to be slightly slower. Say bye-bye to tourism revenue because national parks would be closed, monuments would close, impacting local economies relying on tourist dollars. That means that if you think that during the shutdown, you want to go to a museum because you'll have nothing to do, bad news, you can't go to the museum. I know. It's terrible. It's terrible. What are we going to do without being able to go to a museum? A stock market crash. I don't think there's going to be a stock market crash, although investors don't like flying blind without data. Increase in interest rate on US borrowing. Okay, we know that. A US global image perception disaster. This one's quite big because this is what's going to cause for the downgrade. Delayed payments for government employees if they're paid at all. Say bye-bye to public services. Essential services might also be delayed. I don't think they're going to stop water and electricity and stuff like that. Bye-bye to social benefits. We might see a disruption in social benefits. Halt on government-funded projects. I mean, this is the list, and the list goes on and on and on and on and on. So I think that's what we need to start preparing for. I think what this whole argument's actually coming down to now is around Biden's control of the borders. I heard this from I heard this earlier from Kevin McCarthy. He's got some valid points here.
When you watch what is happening at the border, almost everything he touches is screws up. He has destroyed our border, has it wide open. The problems that are happening all the way up into New York, Massachusetts, every city of the border city, the highest leaders in the Democratic Party has asked him to do something about it. The president could keep government open by doing something on the border, and we can get the rest of our work done.
So he says, look, if you agree to fix the border, we will agree to give you guys some spending cuts. But as long as 250,000 people are crossing the border, I mean, listen to this. This is crazy. I heard this. I was like, wow, I didn't realize it was this bad.
Friday night, that's normally when they drop bad news, right? Isn't that the rule of thumb? You watch what the White House did. More than 235,000 people in the last month crossing our border. It's the highest of the year. They continue to fail And what's frustrating to me is we have an opportunity to secure our border. I think there are Democrats who would want to be there. Look at what the Democrats have done. The mayor of Dallas has now switched parties. The governor of New York tells people not to come. The mayor of New York won't even meet with the president because of his policies along the border. New Jersey's governor lashes out. Massachusetts says it's an emergency. We're watching the Biden administration destroy our nation all along the border, and this is our opportunity to do something about it. We have passed HR 2 to secure the border, and the appropriation.
So it is a true story. If you see what's happening in the United States, I think it's actually very, very, very sad that you see how many people are crossing the border. Now, I have nothing against people crossing the border, but I mean, the state of what's happening in the US, it is actually an absolute state of emergency. So listen, let's hope that something like that will resolve itself. I'm still hopeful that in the last minute, the US has this habit that in the last minute, they actually resolve these things. So it's like the debt ceiling crisis. They pushed us to the end. They fought for every little drop of blood from the other side. And then they said, okay, you know what, we'll actually agree on this debt ceiling. There's two big fears here. The first big fear is that they will get this government, if they do shut down, they will get the credit downgrade from Moody's. That is a big fear. For me, the biggest fear, this is for me the biggest fear that the government has right now. I said, the US politicians are actually panicking about the imminent government shutdown. Most of them are concerned that the US will actually run better without them. That's what I'm concerned about. Imagine they have the US government shutdown and actually things continue to run even better than when the government employees are in. That is what I would be worried about if I was a politician. So I tweeted this. I think people actually liked that take on it. If we do get a shutdown, one person who, I'm not sure if he will continue to go to work, because he said that only 8% of the SEC staff will be at work if there is a shutdown, and that is Gary Gensler. And I think if we're going to talk about Gary Gensler, we need to go through a blow-by-blow account of how he was actually destroyed in Congress yesterday. It was absolutely embarrassing. It was embarrassing on all accounts. And the tone yesterday in Congress was hostile. Yeah, you had, of course, one or two senators, Congress people that were for him. It was the usual suspects: Brad Sherman, Maxine Waters, all these cronies. We know who they are. They're the normal suspects. But in general, in all the testimonies that I've seen, this one was by far the most hostile. It's almost like they all know that Gary Gensler is protected. And because they all know that Gary Gensler is protected, or he knows that he's protected, they all went out against him. And it started with Patrick McHenry. I showed you that clip in the beginning where Patrick McHenry said to him, listen, you don't want to be the first.
Either we find a path forward where the SEC recognizes Congress as a co-equal branch of government and is responsive to our oversight duties, or my option is to issue a subpoena. It's time for you to consider the lasting consequences of your actions, and what that means to the Securities Exchange Commission's reputation.
So either you're going to be the first SEC chairman ever served the subpoena, and I'm going to be the first chairman of the House of Congress serving you with a subpoena, or you're going to actually comply with us. And I'd love to see the day that Gary Gensler gets a subpoena. I'd also love to see 1,500 likes so that we can get to that last story about the biggest Bitcoin seller in the market. This is one of the biggest stories that you're ever going to hear. Anyway, then the punches kept rolling. Okay, so I'll play you a few of the big ones.
You've got serious questions to answer to the public and to Congress, and we intend to get your compliance. We can do it the easy way or the hard way. And with that, I yield back.
We can do it the easy way, or we can do it the hard way. What you can see here is that someone photobombed Gary with an NFT symbol. Have a look at this. So I don't know if you guys can see it.
Bitcoin is not a security.
Thank you, Chair.
Now look over here in the corner.
Remarks I made as a professor at MIT.
It's that aha moment. We've had one of those before.
Why do you believe Bitcoin is not a security?
All right, let me show you a few other ones. So here, this Miss Wagner, she brings up something that I've spoken about quite a few times. And what I've spoken about quite a few times is saying, look, when Gary Gensler was an academic, he was very pro Bitcoin. I've always said that if you were an MIT professor of something, you would really need to have a appreciation for that topic, right? You can't be an MIT professor about a certain topic and not have any passion for the topic. And so this Mrs. Wagner, she says, look, I don't know who I'm speaking to. Am I speaking to Gary, the academic who loves blockchain? Or am I speaking to the corrupt Gary, the lawmaker, who's now on the payroll and trying to protect the incumbents? Listen to this.
Confused at which Gary Gensler, the American public, should believe. The academic version, who spoke glowingly about the power of technology to help more investors participate in U.S. and global capital markets, or the SEC version, who apparently thinks all use of any technology by broker-dealers and investment advisors is inherently conflicted, and firms should just stop using technology altogether.
So that was for me. That was for me one of the highlights. By far, the biggest highlight of the whole event was Senator Richie Torres. This for me just put egg all over Gary Gensler's face. And the reason why this put egg all over Gary Gensler's face is because Gary Gensler's claim to fame is that at the SEC, we're technology agnostic. We don't care about the technology. We care about the instrument. And this is what happened.
Pokemon card. Would doing so constitute a security transaction?
You could purchase a Pokemon card. I don't know what the context is, but if you're just purchasing a Pokemon card.
If I purchase a Pokemon card, is
at
that a security
retail
transaction?
store, that's not a security.
Okay. If I were to purchase a tokenized Pokemon card on a digital exchange via a blockchain, is that a security transaction?
I'd have to know more.
Okay. So for you, the process of tokenization is what transforms a non-security transaction into a security transaction?
Look, if the investing
I thought you were
public-
technology neutral. Suppose I were to...
I thought you were technology neutral too. That's what Gary Gensler's been saying all the time. So that for me was the highlight of the event. Now there were a couple of other other low points. For one, not being able to answer whether Bitcoin is a security. Eventually he answered it.
You've made comments on this. You believe Bitcoin is not a security. Is that true?
Well, I think the staff of the SEC have also, and the prior
Well,
chair.
I'm just asking you this question, and this is not a gotcha.
Just give
I
a
thought
straight
this was going
answer.
to be an easy softball
Just give a
into
straight
harder
answer.
questions. Do you think Bitcoin is a security?
No, I think I've said this in the past that I think that it doesn't
I'm asking you
meet the
to
Howey
answer
test.
my question now. This is not supposed to be hard.
I know. I said it
Just
does
to
not
answer-
meet the Howey test, which is the
Okay.
law of the land about being an
So
investment
it doesn't meet the
contract.
Howey.
All right, so that was Patrick Henry. Let me show you one or two other highlights. We spoke about that one. I love this part where Warren Davidson says, "I wish the Biden administration would actually fire you." I think it's somewhere about here.
A path that would make the SEC do what you're avoiding. Frankly, you're front-running Congress, you're front-running the courts, you're front-running even the own administration, and no one has held you to account for that. I mean, I wish the Biden administration would say you're fired, but they're...
Okay, so he wishes the Biden administration. I mean, they were saying this to his face in front of Congress yesterday. Obviously, this is all televised. By the way, if you love this Gary Gensler stuff, just let me know in the comments what you think. I was loving these punches. Listen to this one. Questioning whether or not Gary Gensler actually respects the judicial law.
Chairman Gensler, recently a federal court called your rejection of a Bitcoin ETF, quote, arbitrary and capricious. In a subsequent interview, you dismissed the judge's opinion. Asked a follow-up question, if anything a judge says would change your mind, you responded, quote, well, no, not really. It seems that you don't really recognize the authority of the judicial branch. You seem to have a love for the Howey test, selectively applied as illustrated by Mr. Torres. But, you know,
But you don't actually respect judicial law. You work for the government and you don't actually respect judicial law. Some other highlights, some other funny moments that happened yesterday. I love this. Someone put this, I think this is a Coinbase drink. It says, wake up, 52 million Americans own crypto. And they put it right next to Gary Gensler's chair yesterday in Congress. It was a clown show. It was an absolute clown show. I showed you this little NFT emblem. I did read this tweet, which it's, I mean, I don't think the word's sad. I think the word is apt. It comes from Paul Grewal, and Paul Grewal is the legal counsel for Coinbase. And he said, I sat 3 feet away from countless witnesses as they testified in a federal district court. I saw how seriously almost all of them took their oath to tell the truth, the whole truth, and nothing but the truth. Testimony in court or in Congress is not supposed to be a game. And that's exactly, they're making it Gary Gensler walks into Congress and he makes testimony into a game. And that's one of the things that Patrick McHenry took him out for. He says, look, you're going to comply with us. One way or another, we're going to get you out here. And I think, you know what? I think there's a lot of egg on Gary Gensler's face. Now, does he actually care? I don't think he actually cares. Because if he did actually care, he would do something about it. But I think he's so protected. And I don't think we're dealing with Gary Gensler. I think we're not dealing with Gary Gensler who was at MIT. We're dealing with a different Gary Gensler. Anyway, we do need Gary Gensler to help us with one thing before we move into before we move into the US government shutdown. That is, we need him to expedite the ETH futures ETF. So the ETH spot ETFs, those have now been kicked down the road. So we're not even, they kicked the Bitcoin ETF down the road and they kicked the ETH spot ETFs down the road. But there could be a launch of an Ethereum futures ETF, and it seems that the SEC want to expedite this. So 𝗟𝗏𝗡𝗏 from Bloomberg, he came out and he said, look, hearing the SEC wants to accelerate the launch of the Ether futures ETF because they want it off their plate before the shutdown. So they've asked the filers to update their docs by Friday PM. No small task to jam into 48 hours so that they can go live on Monday and trade Tuesday. So we could get an ETH futures ETF. Now, good thing and bad thing if we do get an ETH futures ETF. Good thing, it makes ETH a more legitimized asset. We've got ETH futures, now we're going to have an ETH futures ETF. And we know that the judge in the Grayscale case said, you can't treat a futures ETF and a spot ETF differently. So this is the road to a potential ETH futures ETF or a ETH spot ETF. It's like one of the hurdles we have to get through. The next thing that we have is that if we get an ETH futures ETF, it may stop some people from actually buying ETH. Because if you can buy ETH futures ETFs, why should you go and buy the underlying ETH? Okay. The other bad thing is that every time that we've had futures events in the past, it's come at a top in the market. Now, if you've been here for long enough, you'll remember. When they launched Bitcoin futures, or when they spoke about launching Bitcoin futures, that was around 2017, 2018. It was the 17th of December, 2017. When they approved the Bitcoin future, when the contract was launched, it was the local high for Bitcoin in 2017. And from there, we only went down. When we got the first Bitcoin futures ETF traded on the 19th of October. So this is the futures ETF. That actually marked very, very, very close to the top for Bitcoin. So traditionally, the launch of futures and futures ETFs hasn't been a positive account. It is obviously long-term bullish, but if history is anything to go by, I don't think that you're going to get a massive price spike. Maybe you're not going to get a price drop, but I don't think you're actually going to get a massive price spike. All right, I want to spend some time talking about AI, and then I want to go into the big story of the day, which is the story of the big seller. So I'll let you guys get to the 1,500 likes. In the meantime, before we go into AI, maybe we should get Dylan on with us. Dylan is trading on our other channel. So we do have another channel. Channel is called Banter Plus. Go and look for it. Subscribe to Banter Plus. That's what the logo looks like over there. It is the degen side of Banter. Now, I know what you're thinking. Like, Banter could not get any more degen. But actually, yes, Banter could get very, very, very much degen. This is where we're dropping a whole lot of trading content. Dylan, who's amazing, has got his own show on Banter Plus. So he goes live. In fact, I think he's actually trading straight after our show. Dylan, how are you, my friend? We can't hear Dylan. Is Dylan on mute?
Can you hear me?
Oh, now we can hear you. Dylan, how goes, my friend?
Oh, it's been a wild day out there, hey?
Has it been a wild day out there? Let's quickly just look at what's going on.
Have you seen the RUNE chart?
Hold on a second. Let's quickly, how do I get my screen share? Hold on, let's switch. Okay, so let's just see if we can get Dylan's screen share as well. Let's go look at the RUNE chart, Dylan says. Hold on, let's go look at RUNE.
This thing is cooking.
Oh, and I've got a very long position in RUNE.
So I thought I was very clever. I closed my long a little bit earlier, and it's still going. It won't stop.
Wait. Hold on. 648,900. Hold on. 648,998 subscribers. 648,999 subscribers. Are we going to get to
Come on.
650,000 subscribers here live on the stream? 7. Oh, you see, now they're playing the game. 6. You see, now they're now.
Not unsubscribing.
No, they always do this to us. They always do this. All right, so RUNE, you're watching the RUNE chart. What other charts are you actually watching?
Yeah, RUNE's been flying today. We've done really well on RUNE.
Just reshare your screen. Let's get your screen on the thing. Okay, just share your screen. Yes, Dylan is going to do. Okay, there we go. Show me what you're trading today, Dylan.
So RUNE's been cooking. We got RUNE on this pullback here. Yesterday was a little bit wild though. We get these pumps, we get these dumps, and it's actually a lesson in trying to balance taking profits and holding your positions. I mean, in the old days, and I'm talking a few months back, we could hold positions for a few days. You know, the old days. Now we get 2% moves, we get excited. So like yesterday, we were long quite a few alts. I held on to a few. We did a full round trip on them. So again, a lesson to take profits, run at key areas. This RUNE position I closed here at the 618, 1.85, but it's still going. The target for RUNE now that it's broken this, we're looking at about 2. So we'll see how that goes. Have you heard of Band?
I know Band. Band. I think Band is an oracle, if I remember correctly. Yeah.
This has been going well today. I'm still in a Band long. It's been going nicely. And then I've taken a bit of a risky short here on Link. Link's been so aggressive lately. There's an event coming up for Link, I believe, in a few days. And I'm assuming the price is sort of pumping into this event. But it's in a nice area here for me. So a little bit of a risky short for Link. I'm looking for a move down to the 618 over here. So maybe one more fake out up there, a little move lower. Potentially this trend.
You do live trading straight after my show, right? Right after my show, you guys trade. How long do you guys normally trade for?
An hour and 15 minutes.
All right, amazing. So listen, guys, we've got a lot to discuss on this show, but what I want you guys to do is I want you to go to Banter Plus now. Hold on, let's quickly go there. I want you guys to go to Banter Plus now. Subscribe to Banter Plus. That is where you get Dylan's shows. Sheldon's going to start doing shows there. Annie's going to start doing shows there. We're going to do a whole lot of trading show there. So trading shows there. So we need you guys to go and subscribe to Crypto Banter Plus now. There is a link. There is a link here as well. Dill, I'm going to join your stream a bit later today, but we got to carry on because we got a whole lot of big stories there today. I'm going to join your stream later. We're going to trade together. I'm going to maybe take some profits on my RUNE. I might. I've got a big thing.
A good area. You might want to just take a little bit.
No problem, buddy. See you later, guys. Subscribe and also watch Dylan's show. All right, let's talk. We still got 450 likes to get to the main story. Let's talk about AI because there is a lot of AI news, big AI news, life-changing AI news that I think we need to talk about. First bit of AI news is that ChatGPT users can now browse the internet. You know what that means? Up until now, ChatGPT hasn't been able to browse the internet. It had a data set which was about, how long was it? How old was the data set? It was like a year old, 2 years old? 2021. So it was 2.5 years old. Now ChatGPT can actually browse the internet live, which means that the data that you're getting from ChatGPT is actually live. That's a massive improvement to AI. So that's one bit of AI news. I saw this, which was being incredible. So if right now using ChatGPT, kids can put their homework here, and ChatGPT will literally give them the answers. Can you imagine what would have happened if that happened when we were at school? I keep saying it. There are 2 things that I needed when I was at school. The first thing I needed when I was at school, in fact, 3 things. The first thing that I needed while I was at school was this, ChatGPT. Second thing that I needed while I was at school was WhatsApp. Because instead, like the version of WhatsApp that we used to use was that while we were at school, we used to send notes to people under the table. Like we used to send them notes. And the third thing that I wish would have existed when I was at school is Tinder. Because dating was so hard back then without Tinder compared to swipe left, swipe right, and then basically meet up and do whatever you need to do. And then the next day, swipe left, swipe right. I mean, different times. Anyway, let's talk about some more AI news. There is a lot of AI news going on here. So Meta launches AI chatbots with personalities to take on ChatGPT. I'll show you something interesting that we're actually doing in a couple of seconds. And then Amazon is investing $4 billion into a company called Anthropic AI. Now, the interesting thing about this and why I decided to bring it up talking about crypto was that FTX invested $500 million into Anthropic. Now, if Amazon's investing $4 billion into Anthropic, that means that the valuation surely went up. And if the valuation went up, maybe this could actually save the FTX creditors. Imagine a world where the $500 million that FTX invested in Anthropic becomes worth a couple of $1 billion, and all of a sudden you get this situation where the creditors actually get 100% of their money back. Now, it's not that far-fetched. I don't know where they stand on this investment, but I do know that FTX did invest $500 million in Anthropic.ai. So very interesting. And if you are an FTX creditor, holy shit! I mean, maybe you'll get a lot of your money back. What else is there when it comes to AI? So okay. I think that's it when it comes to AI. I do want to get to the main story, but I still see there's 370 likes missing. So maybe we'll do the main story another time, or maybe we won't do it at all. In the meantime, just a few things. If you are living in the UK, or if you're living in, let me see what other countries qualify for this. Hold on, let's just make sure we give you guys good information. So if you live in the UK and Canada, so recently, ByBit has closed down in the UK, and I think a couple of exchanges have closed down in Canada. And you're looking for a new exchange. There is a referral link below. Sign up to Bitget. If you do sign up to Bitget, not only do you get up to $8,000, but immediately you get either $50 or $100 absolutely free. So you got to do it soon, before October 14th. Sign up, deposit $50, get $50. Deposit $100, get $100. And if you do that, also join mine and Annie's trading team, because we've got a trading team in the Bitget trading competition, and I think we're going to win. I've got a very big feeling that we're going to win. Also, probably a good time to give a shout out to our sponsor, Giddy. Giddy is, for me, one of the best crypto apps out there in the world. Why? Because it is a wallet that doesn't actually require a private key. So they found a way to shard the private keys, which is to split the private keys. They hold the copy, but it's encrypted, so they can never use it. You hold the copy in the username, and you hold the copy in the password. And so you're using a wallet without actually having to lose the private keys. So that's Giddy. And I do want to talk about another sponsor, but I'll talk about them later. So, all right, let's talk about the main story. Let's get to the main story. I know we've been talking about this main story for a long time, but I see we still don't have 1,500 likes. So I guess we don't do the main story. We don't talk about the biggest seller of Bitcoin and why it's so important to talk about the big seller of Bitcoin. Or should I talk about it anyway? Scarecrow said talk about it anyway. But then they won't believe me next time I say I won't do it and I get to 1,400 likes. They won't believe it. All right, while you guys are deciding about the likes, I do want to show you a little chart. And this little chart over here is a very interesting chart. Now, you got to follow the logic here, because there actually is a lot of logic here. This is actually a very important story, jokes aside. So here is a chart that was created in the 1800s. And this chart shows you periods where you can actually make money. You can see it says like you'll make money up until 1927, but then you'll lose money up until 1931. And you can see that is when the Great Depression happened. You can see that you will make money up until 1981, and then you won't make money until 1985. And so it goes on and on and on. Let's see where 2008 was here. So 2008 was about there. So you would have made money up until 2007, but then you would have lost money until 2012. So it's very accurate. In fact, it's ridiculously, scarily accurate, specifically when you think that this chart was actually made in the 1800s. Now, what this chart is saying is it is saying that if you invest in markets, you will make money up until about 2026. Then you won't make money up until about 2032, but then you will make money up until 2031. Crazy, right? So let's see how this chart over here ties into our chart, which is the halving cycle chart. The halving cycle says that we will land up making money up until about 1 year. So the last halving happened 2016. So the halving happened over here. People made money in Bitcoin up until the end of 2017. The next halving is happening in 2024. And by this logic, people should make money up until the end of 2025, i.e. 2026. Let's go back to the chart over here. Here's the chart. This chart says that we will make money up until 2026. That's almost ridiculous to think that here is a chart that was created in the 1800s. Here it is. And in the 1800s, it predicted that we would make money up until 2026. Holy shit. Okay. You could say it's a coincidence, but I don't know if it is a coincidence. I think that there's something in these charts. I also think that there's something in the halving cycle, in the 4-year cycle. And now we are just 206 days away from the halving. And we know that in the period between now and the halving, what you can see is that you're going to get a slight sell pressure. So you had a slight sell pressure over here before the halving. You had a slight sell pressure over here before the halving. And you may get a slight sell pressure over here before the halving. I think I've worked out what the selling is. And I think I'm going to show you now what the selling is and how much selling there's actually going to be. Because actually a huge seller in the market. This seller actually owns about 10% of all the Bitcoin in circulation. No jokes. This seller is a group of people. It's not one seller. It's a group of people that own 10%, get this right, 10% of every single Bitcoin in circulation. This seller owns 1.8 million Bitcoin. And they are selling. In fact, not only are they selling, but they're actually selling pretty aggressively. I'll show you. So here is, let me just sign in here quickly. So here is the seller. Let me quickly go. Here is the seller. This is the seller sending tokens to exchanges. You can see that the seller is selling tokens to exchanges. And the seller is actually miners, Bitcoin miners. What we're seeing now is we are seeing aggressive selling by the Bitcoin miners. So should we worry? Because miners have actually been quite good investors traditionally. Should we worry, or is this just a nothing burger? Well, I'll tell you. If you're going to worry, you got to ask yourself, do they know something that you don't know? Now, what do miners know? Well, what we do know about mining is that, for one, the hash rate, which is the difficulty, the how difficult it is to mine Bitcoin, is now obviously at all-time highs. So this is the hash rate. This is the amount of computing power that you actually need to mine Bitcoin. And you can see that the hash rate is actually right now at an all-time high. So that's maybe one reason why miners are leaving. Another reason why miners are leaving is because energy costs have gone up. And if energy costs have gone up, then the cost of mining Bitcoin has actually gone up. And maybe that's not viable. And so what they're doing is the miners are basically saying, look, we've got to sell our Bitcoin. And as you can see, the miners own right now 1.829 million Bitcoin, which is 10% of all the Bitcoin in circulation. It's a massive number. So why the hell are they selling? Is mining getting too difficult? Is it getting too expensive? Or is it because of the halving? I'm going to show you why it is because of the halving. So what is the halving? You all know what the halving is. The halving is where we halve the Bitcoin reward that miners earn for mining a single Bitcoin. That means that if today the miners earn 6.25 Bitcoin every time they mine a block, when the halving happens, they're going to earn half of 6.25, which is 3.125 Bitcoin for every block. And that block reward is going to continue to grow for the next 4 years. So up until now, for the last 3.5 years, the miners have been earning 6.25 Bitcoin for every Bitcoin block mined. Before that, they were earning 12.5. Before that, they were earning 25. Before that, they were earning 50. Now we're going to halve again. And in 202 days exactly, well, not exactly, because 200 days, because we don't know exactly when the block will fall. This is taking the average of the number of blocks. In 200 days, the miner's reward is going to halve to 6.25, from 6.25 to 3.125 Bitcoin. What does that actually mean? I'll tell you what it means. It means that if you're a miner and you want to produce the same amount of revenue, not Bitcoin, but the same amount of revenue, assuming that the Bitcoin price stays the same, you're going to need to double your mining power, which means you're going to need to double the amount of mining equipment that you have. So if you're a Bitcoin miner and today you're making $1 million mining Bitcoin, and we assume that the Bitcoin price remains the same, in order to continue making $1 million worth of Bitcoin, you're going to need to double your hash power. You're going to need to double the amount of miners that you've got in your mining farm, double the amount of machines. How do you do that? Well, you need to buy more machines. How do you buy more machines? Well, you have to prepare. You have to sell Bitcoin that you've earned. You have to take the Bitcoin that you've sold, and you have to invest that Bitcoin into new mining machines so that in 200 days, when the Bitcoin halving happens and you start earning half the rewards in Bitcoin, you're still making the dollar value under the assumption that the Bitcoin price stays the same. So let's just for those people who are a little bit lost, assuming that you mine one Bitcoin, you get a reward of 6.25. You take the Bitcoin price today, which is $26,000 times 6.25, you get a number. So what's the number? 6.25. Let's just get it. Let's make it quite accurate. So calculator. So you say 6.25 times 26,600 equals $166,000 for mining one Bitcoin block. But that's going if the Bitcoin price stays the same, the block reward's going to half, which means you're going to have to mine. You're going to have to mine 2 blocks to get the same reward. How do you do that? Well, you got to double your machines. In order to double your machines, what do you need to do? You need to sell Bitcoin. You need to sell Bitcoin and start investing in this infrastructure play right now. What does that cause the Bitcoin price to do? Well, here you can see that about a year before the halving, they start to invest in the machinery, and that's why you start getting this dip about a year or just under a year, 8 months before the halving. You start seeing the miners actually start selling their Bitcoin, slightly pushing the price down because they need to take the Bitcoin and invest it in new hardware, new machinery, new cooling systems, and whatever else. Why? So when the halving happens and they start earning less actual Bitcoin for every block mined, if the price of Bitcoin doesn't go up, they actually start making the same amount of money. A lot of these mining stocks are exactly that. They are listed companies on the stock market. And what you know when you're a listed company on the stock market is that if you want the market not to punish you, you have to keep your revenue higher than the previous period. If you're a Bitcoin miner, how do you keep your revenue higher than the previous period in a period where right now the Bitcoin price is actually staying slightly more stable? The only way to do it is to invest in more machinery and to double the amount of Bitcoin that you can actually mine and hope that the Bitcoin price either stays the same or goes up. And that is how you're going to make money. And because these Bitcoin miners are, let's just have a look at these mining stocks. So here's Marathon. You can see that Marathon's had a hell of a year. In fact, if you look at it here, Marathon's actually up. Still today, it's 150% up. It was about 500% up. And if the Bitcoin price goes up, it will be about 500% up again. So because a lot of these miners are actually listed companies on the stock exchange, what happens is they're going to want to keep their earnings up. To keep their earnings up, they need to mine more Bitcoin. To mine more Bitcoin, they need to have more miners. To have more miners and to invest in the infrastructure, they need to sell Bitcoin today ahead of the halving to do it. That is the nutshell. And so that is why you shouldn't worry when you see the price slightly dropping in the next couple of days, months, weeks, because you know that the pressure is coming from the miners, and the miners are forced sellers. And the reason why they're forced sellers is because they need it. They need the money to invest in infrastructure so that when the halving happens, they can double their capacity. That is it. That's the analysis that I did. I think I stumbled onto something this morning with the research team when we were actually researching all of this, and I think we cracked the code as to why the miners are actually starting to sell so aggressively. Remember, you heard it here first on this channel first, and in fact, if you did actually want to hear it first, you could have just gone onto Banter Bubbles, clicked on Research Call, and joined our research call this morning, and you would have heard it first before the people on the show actually heard it first. Anyway, that's it for today. I'll see you guys again tomorrow. Until then, tomorrow's the big banter, guys. We've got Elio, we've got 𝗓𝗓𝗓𝗓, we've got Melton, we've got all the big friends and family coming up tomorrow for banter. So I'll see you guys again tomorrow. Say again? Oh, Dylan Shaw just said Dylan Shaw is coming up live. Here it is. You go to Banter Plus. And you go to, he's shorting. Whoa, okay, he's not live yet. He's going live in 1 minute 30. So we should wait for him to go live. Yeah, let's wait for him to go live. Just tell him he better go live on time. Because tell him we're all sitting here having a drink, waiting for Dylan to go live, listening to Dylan. I know it's strange. I eat lemon. Listen, while we're waiting, we do have another sponsor that I want to talk about. Let's see if I can quickly find him. SmartDex. SmartDex is a DEX that protects you against impermanent loss. And they give you impermanent gain instead of impermanent loss. Now that's huge if you're a liquidity provider. And so what you have here is they have a new shield, which is called a monitoring solution, which keeps a close eye on everything that happens on the blockchain to help you prevent financial hacks. So these guys are really, really, really protecting you. So go and check out SmartDex. And also if you do become a liquidity provider, you can actually get some rewards. All right, tell Dylan he better go live. We're all waiting for him. Can someone tell Dylan we're all waiting for him to go live and I can't keep refreshing? Dylan. Go live, Dylan. Dylan. He says 3 seconds. He says 3 seconds. 5, 4. Oh, he says 30 seconds. Okay, it's 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Show me, we're putting him under pressure. He's still new to this. He's under pressure. He's shivering. Go, Dylan, go. Okay, Dylan, I'm giving you literally 15 seconds. We can have a viewing party. We can all watch Dylan. Dylan's doing his hair. He has more hair than... Oh, Dylan's live. Wow, why am I here? Why aren't I hearing Dylan? He is talking. I don't think his microphone's working. I don't think he knows his microphone's not working. No audio. His microphone's not working. Someone tell him that his microphone's not working. Quickly, someone tell him. Someone should tell him that his microphone's not working. Come on, James. Mic check, 1 2 1 2. Dylan, mic check, 1 2 1 2. He's talking to himself. He literally is talking to himself. You can see he's literally talking to himself. All right, listen, go and catch Dylan's show. I'll see you guys again tomorrow. Until then.
Dylan, I think you're muted.
Until then, trade well, my friends.
I can hear the music, but not you.